my fellow investors. Whoever watched my series on DHC and RMR knows exactly what's my view on this company and these people. But I just wanted to make a video analyzing Portnoy's buyout of ALR Life. So this is from the ALR Life from their last in their filing. So the headline is this: purchase price provides shareholders with an 85% premium to average share price of the last 30 trading days. So what's about it? ALR Life today announced that it has entered into a definitive agreement with ABP Acquisitions. What's ABP Acquisitions? I'm assuming ABP stands for Adam Barry Portnoy. That's just my guess. Or ABP, whatever, under which ABP will acquire all of the outstanding shares of ALR common stock for $131 per share in cash, which represents an 85% premium to the average trading price of the last 30 days. Wow. And the total stockholders in the transaction is approximately $43.8 million. Okay, ABP plans to acquire ALR Life through a tender offer, whatever. ABP, together with its affiliates, currently owns approximately 6.1% of ALR's outstanding shares of common stock. And DHC, which holds approximately 31.9% of the outstanding shares of ALR common stocks, has also consented to the transaction and has agreed to tender its shares in the tender offer. Okay, so this headline, purchase price provides shareholders with an 85% premium to average shares, is such a farce. What the headline should be: purchase price of a 70% discount to book value. Let's see what's going on here. Let's understand what's going on, and then we'll start trying to analyze it. Who is ABP? Who is this company? So this is from RMR's last 10K. Adam D. Portnoy, the chair of our board and one of our managing directors, is the sole trustee of our controlling shareholders ABP Trust, and owns all of ABP Trust voting securities. So if anyone learned this history of Portnoy's and RMR, the way they worked, they always had an entity which belonged only to them. No trustees, no investors. They always had an entity that belongs only to them. And that entity always controlled all the other entities and all the entities, subsidiaries, and so on and so on and so on. I guess there's a saying, there's no honor between thieves. And I guess the Portnoys knew how many people they betrayed and backstabbed, and they're always afraid maybe they would do to them. So they always had an entity that belonged only to them. That entity controlled all the other entities. So RMR is the company that controls all the subsidiaries and everything else. Who controls RMR? ABP. So Adam Portnoy controls RMR, and through that he controls everything. So that's the first thing. Who is ABP? And ABP is Adam Portnoy. Adam Portnoy now decided to buy his own company. Of course, all the companies that belong to RMR, it's all theirs. It's just built in a way that has a trustee as if it's an independent company, but it's not. It's all their companies, as I placed out in all the videos before this. I explained everything throughout all the history, the way it works. So you have to ask yourself 3 questions. And something that has to be very, very simple. Whatever is going to be in any kind of information, in any kind of filings, it's only going to see the what. It's never going to see the why. No one's going to tell us why Portnoy decided to buy this company, why they decided to buy at such a price, etc., etc. They only tell us what's happening. They're not going to tell us why it's happening. So we need to ask ourselves a few questions. But first of all, let's just analyze this transaction as it is. What's the $31? How much is the true value of this company? So this is the last thank you from ALR Life, September 30, 2022. How much is the true value of these shares? If we take the total assets, $382 million is the total assets. And these assets are true assets. It's not like intangible assets. It's cash, restricted cash, accounts receivable, due from related persons, debt and equity investments, property, operating lease, whatever. So these are all pretty much tangible assets worth $382 million. How much is the total liabilities? So we have total current liabilities, $126 million. $102 million of total long-term liabilities. It comes out, they have around 32.6 million shares. It comes out to about a book value of 4.7, 4.8 per share. And another thing, just want to point out that these liabilities, let's say accrued compensation and benefits, accrued self-insurance obligations. I have no idea if these liabilities, if the company goes private and maybe he fires off a lot of staff, I have no idea if he has to pay all these compensations and benefits. Not always all these compensation benefits are actual liabilities the company has to pay. It's just, so I don't know. I don't know if these liabilities are actual liabilities. What happens after the company goes private? I have no idea. But let's just take the numbers as is. The book value is around 4.7, 4.8 per share. And also the assets, property and equipment, net. So depreciation. How much is the true value of these assets? How do they value it? I don't know. But let's just take the numbers as it is. It's $4.8 per share, more or less. And he's buying it out for 1.3. So he's buying out the company at a 7% discount. A 70% discount, sorry. So the first question we have to ask ourselves is DHC, this is the last 10Q from DHC, they own around 10.7 million shares. At 4.8 book value, so these 10.7 million shares are worth around $50 million. DHC consented to this agreement, and they're selling now these shares that are worth, the book value is around $50 million, they're selling it for $1.30, which is $30 million, $14 million, whatever it comes out. So this is basically giving out Portnoy a free $37 million, $36 million just for present. Why are they doing it? Why in the world should DHC, who owns a majority of the company, if we saw over here, ABP owns 6.1% of ALR's outstanding shares, and Diversified Healthcare Trust owns 31.9%. Why should a company that owns almost 32% of the shares sell to a company that owns only 6% of the shares, their shares at a 70% discount? No company in the world will ever do such a thing. The answer is Portnoy is DHC, Portnoy is ALR, and Portnoy is RMR. All the board of trustees, all his puppets. They do whatever he tells them to do. And he just now told DHC and told ALR, I'm going to buy out my company from you. I'm going to buy my company for myself, and you do exactly as I tell you. And I'm earning here a very nice, beautiful discount, 70% discount on the company. So Portnoy just now ripped off DHC shareholders and ALR shareholders 70% of the book value. Just ripped them off just now. So this is the facts. Now the question is, why did he do it? And why did he do it now? And my biggest question is, why did he buy out Alaris Life at $1.30 per share when they were trading at about 70 cents? And he didn't do this to DHC. DHC is trading at a book like less than 10th of its book value. He could have bought DHC shares for $1.31 and do the same exact shtick that he's buying it for 85% premium, and he would have earned much more money. So these are big three questions. Now, I have to say this is all a game of guessing. I have no idea what's going on in his mind. And in one of my past videos, I predicted that what Portnoy is going to do is he's going to transfer assets from DHC to Alaris Life. Well, I was partially wrong. I thought he's going to continue to keep on ALR going on forever, keep on taking on all his fees and whatever. And I was wrong. He decided to buy it out. So he outsmarted me. Why not? He's buying a company at 30% discount. Why shouldn't he do it? But maybe he's going to continue his ALR might continue to manage DHC's senior homes, and maybe he's going to get. I don't know what he's going to do after he takes the company private. And he still might transfer assets from DHC to ALR. I have no idea what he's going to do. But I didn't see this coming. And this actually posed for me a bigger question. Why did he do it to ALR and he didn't do it? Maybe he's going to do it, but why didn't he do it to DHC? So let's start from the first question. Why is he buying it now? As you can see over here in this graph, the stock, this is ALR, already went down below around $1.30. We're talking about already 7-8 months ago. Why didn't he buy it then? Why is he buying it now? And why didn't he buy years ago? I mean, this company is trading below book value for years and years and years. What happened now? This is one question. And I'm throwing out a theory. I don't know. I have no idea if it's true or not. It's a guessing game. I have a theory that we need to ask ourselves what Portnoy controls and what doesn't he control. He controls all the companies. We could see over here. Everyone just did whatever he tells them. DHC consented, ALR consented, everyone consented to whatever he wanted to do. So he controls all the companies. What doesn't he control? He doesn't control the stock price of the market. Okay, but if you just don't take care of your company, just make it look as if it's mismanaged and losing money, you can get rid of all the bad assets for years upon years upon years. Then you can buy that whenever you want. Everyone knows how bad these companies are. Everyone knows how bad RMR is. Everyone knows how bad the Portnoys are. It's not a problem. You can't control the stock price, but he doesn't need to work hard to make the stock price go down. What's the biggest thing he doesn't control, which is actually very, very strong, big risk for him? In my opinion, the biggest risk for Portnoy is class actions, lawsuits, and all these different kind of things. Even if they can't do anything to him, the ongoing lawsuits could be cost millions and millions and millions of dollars. That's something he has no control over. If he pisses off shareholders, they could sue him. They could open up all these different kind of actions, and it could cost him tons and tons of money. That's the only thing he doesn't control. I'm throwing out a theory. I have no idea. I'm just throwing out a theory. A company knows all its shareholders. When did they buy it? When are they selling it? Who owns them? Maybe, just maybe, in the past 7 months, all the shareholders who bought the company when it was over $1.31, they sold their shares. At this point, it came a point of view in the past few weeks, let's say maybe a few months, that all the big shareholders, which Portnoy was afraid of that they might sue him, sold their shares. And now he's left with all these different shareholders who he's not afraid of them. They don't have the money to sue him. And he said, okay, now I can buy it for $1.31. Why is he paying such a huge premium? He could have bought it also for 70 cents. No one would have told him anything. He could have bought it for 50 cents. No one would have told him anything. If he would have bought it for 50 cents or for 60 cents or for 70 cents, then maybe he would have got sued. And that's why he was afraid of it. He said, if I pay $1.30, I know that there's no investors who own the company who bought it over $1.30 that I'm afraid of that they're going to sue me. All the investors who are still left in ALR, they all bought the stock price under $1.30. That's why he offered this exact price. That's why he didn't offer $1 and $1.20 or 80 cents or 90 cents. He knows exactly who owns all these shares. And he says, if I buy the stock price at $1.30, this is a stock price which makes most sense, which I won't get sued. This is my theory. That's why he waited till now to buy it, and he did buy it half a year ago. And that's why this is the price he's paying for it, $1.30. If he knows if he'll pay for $1, there's a lot of investors who might still sue him. Okay, this is just a theory. And this might also explain why he's not buying out DHC. If you look at DHC's numbers, it's crazy. ALR, the book value is around 4.8, 4.7, and he's paying for it a 70% discount. But DHC is even cheaper. If you look at the book value of DHC, we have over here this is the last 10Q. So we have over here all total assets 6 million, total liabilities 3.3 million. So the shareholders' equity is 2.7 million divided to 240 million shares. It's over $11 a shares, and it was trading at 70 cents, 65 cents, 60 cents. Why didn't he do the same exact thing? He could have paid here $350 million, and he's getting for that billions of dollars in assets. Why didn't he do this? It can't be he doesn't have the money. They only has $50 million, but he doesn't have right now $300 million or $400 million. That doesn't make any sense, because this could be the most unrisky LBO in the world. He owns all the voting power. He could tell his trustees to do whatever he wants. He could come to a bank and tell them, listen, this is my company. This is my company's subsidiary, and this is the subsidiary, whatever. Their assets are worth billions of dollars. I could make them all vote to sell me at $1.30. Give me a year. I'll pay you back $350 million plus 20% interest. I'll sell off a few assets. You get back your money. He doesn't have to have a penny. Any bank would lend him the money. They know this is a totally risk-free investment. This is the most risk-free LBO possible. You're buying out a company, sell it, pay back all the debt, sell a few assets, give back the bank the loan. Everything's good. Why didn't he do it? Again, I'm saying maybe this whole theory is the same thing. Maybe DHC didn't come to a point where he could buy it out for $1.30, and he's not afraid to get sued. Maybe there's a lot of shareholders who still bought it at $3, $4, $5, I don't know, $6, and big shareholders, and he's still afraid of them. And that's why he can't buy out DHC and get a 95% discount. He knows he could buy now RMR for $45 million and a 70% discount. He's not afraid to get sued. DHC, it didn't come to that yet. That's just one theory. I have no idea if it's true or not. I'm just throwing it out. But I think any investor who's still invested in these companies, I have no idea why anyone's still investing in these companies, has to ask himself, why did he buy out ALR now? Why didn't he buy it years ago? After he decided to buy that, why did he decide to buy such a price? He could have paid much less. No one could have stopped him. He could have paid 90 cents for the dollar, for the 70 cents, and no one would have told him anything. He could have done whatever he wanted. Why did he pay $1.30, not 90 cents? Why did he wait 7 months until he made this buyout? And why is he buying out ALR and not DHC? So anyone who's still invested in DHC and is thinking of a buyout, he said, okay, let me buy DHC at 70 cents. Tomorrow, Portnoy is going to buy back the company at $1.30. I don't know. I'm just throwing out a theory. Maybe it's right, maybe it's wrong. It's just a guessing game. I have no idea. But I think these questions, any investor who's still stuck in this company, these are the kind of questions you have to ask. It's not about what they say. It's about why. Everything has to be the why, not the what. And the why, they're never going to tell us. Thank you very much, and hope you enjoyed this video. Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.